What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. We just witnessed a flash crash in Bitcoin, and as I'm recording this, the price of Bitcoin is $39,487. Now, very briefly, the price of Bitcoin actually hit $30,000, which is more than a 50% drop from its all-time high of just around $65,000. So number one, we're going to take a look at what caused this, and number two, we're going to look at what you should do about it. Ready? Let's dive in. Full disclosure here, it is impossible to know for sure why something happens. Anytime you see markets move one way or another, you're always going to see headlines and articles and people talking about, hey, this happened because this happened. And that's just human nature. We are storytelling, narrative-driven beings. And while everybody knows that correlation does not equal causation, that's the way our brain works. That if you see things happening together, your brain will automatically assume that they at least have something to do with each other. And it takes an active choice to put in the mental effort to try and disprove the fact that that correlation is non-spurious. So keep that in mind with it. The couple of things that we're going to look at today quite possibly have nothing to do with the drop in Bitcoin. And quite frankly, every reason that everybody ever attributes to anything happening may or may not just be spurious correlation. It takes a tremendous amount of effort to make sure that that is not the case. Our brains default to correlation and causation being the same thing. So with that out of the way, we're going to look at two things. Number one, what the headlines are saying. And number two, what this looks like to me. So what are the headlines saying? Basically, markets have gotten frothy. Crypto markets are what I'm talking about here. Same thing that happened in 2017. A massive amount of speculation, a big number of ICOs coming out. Very similar to what we're seeing right now with an obsession with shitcoins. We got the NFT craze, and you've got celebrities endorsing Bitcoin and other cryptocurrencies. These are all things that outside of the cryptocurrency market are things that are associated with market tops. And so the headlines are just saying, hey, maybe sentiment has just shifted and we've seen the top in crypto and it's time for another crypto bear market. And that's certainly possible. Here's what it looks like to me. This looks like a dump and pump to me. This looks like a coordinated effort by a couple big whales to sell until you get the price hammered down to a point where it triggers a bunch of other whales to sell what they own, which will drive the price down even faster. And then the money that was able to get out while driving the price down will instantly jump back in as soon as their threshold is reached. And the speed at which Bitcoin moved down and the extent to which it moved down dropped extremely quickly to 30,000 and then extremely quickly back up to almost 40. It looks like that to me. It literally just looks like trading in order to book some profits and get in at a lower cost. So what should be done about it? Well, number one, in my opinion, and this isn't investment advice, in my opinion, there are only two incorrect allocations to Bitcoin. The first wrong approach to Bitcoin is having zero Bitcoin. 0% of your portfolio in Bitcoin is the wrong allocation, in my opinion. There's one more allocation, in my opinion, that is incorrect, and that is 100% of your portfolio in Bitcoin. I think it's incorrect to have 0% in your portfolio because it's very possible that this is just another one of those same 20 to 30 to 40% drops that Bitcoin has seen a dozen times or more in its massive bull markets that it's had multiple times since inception. If it's possible that Bitcoin continues to go up from here, it's possible that it continues the exponential pace of growth that it's been on, which means that if you have a 0% allocation to it, you're missing out. Quite simply, that's it. You don't have to believe in it. You don't have to have laser eyes. You're just missing out on some gains. I also think that 100% of your portfolio in Bitcoin is the wrong allocation because of days like this. It's also the wrong allocation because Bitcoin is a bet on what will be money in the future, and being able to see into the future and being able to tell what money people will choose is an impossible task. And putting 100% of your portfolio in anything, whether it's the dollar, treasuries, Bitcoin, gold, stocks, real estate, or anything else, is a fool's errand, and it is exposing yourself to blow up risk. So what should be done about it with an asset class that can move so quickly in so short amount of a time? Well, you've got two main approaches. Approach number one is look at your portfolio and say, how much of my portfolio am I willing to lose? That might be 3%, that might be 5%, it might be 10%. but there's going to be some amount of your portfolio, a percentage of your portfolio that you can look at and you can say, if the worst case scenario happens to Bitcoin, I'm okay losing, let's say 5% of my portfolio if Bitcoin does go to zero. You make one lump sum purchase and you never look at it again. The upside is with Bitcoin potentially going to 250, 500, a million, if it becomes used as money widespread universally down the road, that means that 5% allocation to your portfolio could double or triple or quadruple your overall entire portfolio. It has meaningful upside. Whereas if the worst case scenario happens and everybody dumps it and nobody ever buys it again or uses it again and it goes to zero, well, the worst case scenario is you lost 5%. So that's approach number one. You allocate a specific percent of your portfolio to it and you never touch it, you never watch it, and you say this is going to take me to the moon or it's going to lose me 5%. Then you watch days like this happen with no sweat because you've defined your risk parameters and you're okay with them and you know that it's a volatile asset. The second approach is to go with stacking, which is the industry slang for dollar cost averaging. Every single day or every single week, you make a purchase of a specific dollar amount. Have it on autopilot, whether it's $10 a day or $50 a week or anything else of your choosing. You have an automatic investing program where it purchases a specific dollar amount every day. Since it's a specific dollar amount that you're purchasing every day, that means on days when the price is lower, you're purchasing more units. And on days when the price is higher, you're purchasing less units. That means over time, in a very volatile asset class, your average cost is actually moving down. You're accumulating more of it as it's lower and less of it as it's higher. That means you take advantage of days like today when the price drops rapidly and quickly. You don't have to worry about timing or trading, and you're okay if it shoots right back up. Now, personally, what I do, and again, none of this is trading advice because I don't know your specific financial needs, so I can't tell you what you should do. But what I've personally done is gone with a hybrid approach. Back in October, when Bitcoin was around $10,000 or $11,000, and I made videos about it, you can go and find these videos and watch them, I put 5% of my portfolio in Bitcoin, and I've been stacking ever since. I went through a bunch of different products and services, and the best tool that I've found, and now it's the one that I use exclusively, and it's the only one I recommend, is Swan Bitcoin. Number one, it's extremely easy to use. Number two, it's very cost effective. And number three, they put you on autopilot and they let you purchase every single day with as little as $10 a day. And on top of that, they'll do auto withdrawals to any wallet of your choice. So if you want to try them out, use my link in the description below. You will get $10 worth of Bitcoin for free just for signing up. As always, I really appreciate you guys. Thanks so much for watching. Have a good day.